a millennium, a total solar eclipse has been viewed as a bad omen. So with just 10 days until what is historically known as the worst year of the month for the stock market, September, is the eclipse a warning sign for investors as they brace this very scary month? Are you scared? Portfolio Wealth Advisors co-founder and chief investment officer Lee Munson. Scary time or no?
I think it's going to cause a shock. We're going to get more volatility. You see a lot of these big hedge fund runners, guys like Jeffrey Gundlach, talk about buying puts on the market, trying to hedge themselves. Here's what I see. I think we're going to get a pullback. I think 5–6% off the top is something very reasonable, but there's too much liquidity in this market. There's too much profit gains in this market. I think that we also are expecting the Republicans are going to get their act together and give us some corporate tax relief.
Do you think that's priced into the gains we've seen on the year?
Yeah, well, especially in small cap, it has. I don't think so much in the S&P 500, but I think if you look at the Russell 2000 smaller companies, I mean, it's down 4 or 5% this year. Clearly, Wall Street is sending a signal that you told us last year we were going to get a 15% corporate tax relief, which helps smaller companies. We haven't seen it. So we're seeing declines.
But what about the larger companies, the large cap stocks? Because if they got a tax holiday, take your trillions of dollars parked overseas and bring them back home, wouldn't that be good?
It would, but we're not seeing that really in the price of stock. You look at something like General Electric that's just hit the skids down 18% this year. A lot of traders have a theory, I think it's my theory too, that these larger companies, GE and Apple, just to pick on them, they don't pay even 15% tax rate. So the idea of them getting anything out of this Congress is going to be very slim. That's why you're seeing weakness in the big momentum FANG stocks and that NASDAQ.
Yeah, but they've really propelled the market so far this year. I mean, especially the FANG stocks. Come on.
Well, what I'm saying is that I think they continue to move forward, but they're not getting the tax relief. They're moving up just on profits. That's why I say I don't expect a 10 or 15% correction because the FANG, they are making money. It's the small caps that are languishing in tax reform hell.
Sometimes when people get nervous, they like to buy utilities. This has been a strong sector. Do you like certain utilities over others? Not
particularly. You know, I tell you, I think it's a trap. And with the interest rate situation, I think people should look at other things. Look at it. Like I mentioned General Electric. Now look at General Electric. It's lost 40–50 billion a market cap. You could buy it today at what it was selling back in 2015, pays a great dividend. I would rather look at something like, if you look at some of the telecoms, I would probably avoid those and look at the companies that can actually make stuff for them, the pickaxes rather than the...
And Melt could be the next CEO of Uber, just saying.
I'm just saying, I think he needs to move on from GE.
You brought up the central bank. Later this week, the annual economic symposium that is Jackson Hole kicks off in Wyoming. Janet Yellen is expected to speak, so is the European Central Bank President, Mario Draghi. What do you expect them to say? Do you expect any bombshells or fireworks from Yellen?
No. I think this is what we're going to find all the way back 5 or 6 years ago when we saw Jackson Hole, just start telling us exactly what they're going to do for years. I think we're going to find more talk about slow and measured. We already know that we're going to have $50 billion a month that my buddies on Treasury bond desks are going to have to pick up. I say no bombshells. The market goes higher after that meeting.
Interesting. What about from Mario Draghi? Any bombshells there? A lot of people have been saying, Europe's the place to put your money, and he could announce an end to, or a pullback from the stimulus measures?
Let me put it this way. Draghi and the ECB guys tend to have an issue with cutting things a little too soon. So I wouldn't put it past them to make a hawkish comment that could cause a correction in those markets. I want to buy that correction. So if Draghi says something that causes markets to be disruptive, I think you buy that dip. Overall, they're providing tons of liquidity. They're not going to pull it back.
We've got 15 seconds to go here.